Before you start the refinance process, you need to understand the difference between a rate and term refinance and a cash out refinance. And the reason why it's important is it affects your payment, it affects your interest rate, it affects the loan amount, and it affects the closing cost. I'm a loan officer. I help people get mortgages to buy houses and sometimes refinance. And when people come to me and express their interest in refinancing, the first thing I'm trying to determine is it a rate and term or is it a cash out? So when people come to me asking about a rate and term refinance, what that means is they're trying to refinance their existing balance and not get any cash out. Their interest is in either lowering the interest rate and payment or shortening the term on the loan. That's all they're going to do with that refinance. They're trying to save money or shorten the term. Now, what is interesting on a rate and term refinance, sometimes you can structure the loan to where people actually don't have to make payments for a couple months and even get their escrow account back. So hypothetically, you could be somebody that maybe is refinancing $500,000. You're doing a rate and term. You're not getting any cash back. But in the process of the refinance, let's suppose your mortgage payment is $4,000 a month. You end up not having to make a payment for 2 months, which is $8,000. And let's suppose in your escrow account you have $4,000. You decide, hey, I want to get that $4,000 back, and I want to finance the new escrow account in my new loan balance. So you end up with about $12,000 of positive cash flow. It wasn't a cash out loan, but the net result is you end up with about $12,000 in your pocket because of the way you structured the loan. The second option is a cash out loan. So a cash out loan is where you go to a lender and say, I owe $300,000 on my house. And what I want to do is I want to borrow an additional $100,000. I want to take my loan up to $400,000. This would be considered a cash out refinance. So what's different about this is the amount of money you can borrow is capped typically at an 80% loan to value. So if your house is worth $500,000, 80% of that would be $400,000. That's the max loan. On a rate and term refinance, you can go all the way up into the 90s. You might actually be able to get a loan just under $500,000. So it's much more for a rate and term. The other thing on cash out refinances is in many cases, you'll find the interest rate is slightly higher and the costs are slightly more. So you have to understand what you're paying for when you do a cash out refinance. It's not just about getting the cash out. It's also about the additional cost that you're going to take on to get that money. Understanding the difference between a rate and term and a cash out is important. And if you're only getting a little bit of cash, you might want to stick with the rate and term because it's more economical.